Today I'll show you how a single business transaction moves through the Fynapse Accounting Engine to produce a balanced accounting journal. By the end of this video, you'll understand how one business event can generate multiple accounting entries even across different accounting standards using a simple and transparent decision process. Every transaction entering Fynapse follows the same accounting pipeline. Rather than hard-coding debit and credit accounts into one larger rule, the accounting engine makes a series of independent decisions. Each decision builds on the previous one until the correct journal is produced. Everything starts with a business event. Now, a business event represents something that happened in the business. In this example, it's a purchase. Now, this transaction here typically originates from upstream systems and is then loaded into Fynapse together with all of its business attributes, such as transaction amount, currencies, counterparty information, entity, product, and many, many more. When we toggle the drill down and start our explorative path, you can see that we also have a sub-event mentioned here, in this case, goods or service, that provides additional context, but also is defined as a potential decision parameter for the purchase before the accounting begins. Once the purchase event enters the accounting engine, Fynapse then determines which posting components are required based on the setup. Here we have determined that the purchase event is linked to the inventory purchase posting component. Posting components represent accounting concepts rather than general ledger accounts. They define what we're accounting for, not necessarily where it will be posted. Notice that this posting component immediately branches into both a debit as well as a credit posting pattern. And that's because one business event always produces multiple accounting entries, and together they will ultimately form a balanced journal. Next, Fynapse resolves these posting patterns into account lookups. In our example, the debit side resolves rather to inventory, while the credit side resolves to the accounts payable. Now, these at this point in time are very much still logical accounting concepts. We haven't selected a general ledger account yet. Separating the account lookup from the posting components means that the purchase logic can be reused across different tasks of the business without having to duplicate the accounting rules. Now, when we move further down the line, the accounting engine now evaluates, in this case, which business dimensions that accompany the transaction. So in this case, and in this particular configuration, it considers attributes such as line of business, such as department, company, and ultimately product. Those dimensions determine exactly which account should be selected. For example, a purchase for the retail services business may post or will post here to a different inventory account than a purchase for the wholesale hardware business, even though both originated from the same purchase event. And this has been designed in Fynapse so that the accounting is highly configurable without changing the underlying accounting logic. Now, finally, after evaluating all of these dimensions, Fynapse then ultimately resolves the final general ledger accounts shown here on the right. Now, these are ultimately the actual accounts that will be used when the journal is effectively created. Now, because every decision here is data-driven, the same purchase event and the same purchase transaction could resolve entirely different accounts for, let's say, different legal entities, different products, or different business units, simply by changing the input data or the configuration you see here on screen. Now, it is important to mention that the process is also executed independently for each configured accounting basis. So that means that, again, each single purchase event can generate one journal for both IFRS, another one for US GAAP, during the same processing run. And that means that once that transaction is processed once, the accounting engine applies the appropriate accounting rule for each accounting basis automatically without having to load the data again for each subsequent accounting basis. Finally, the accounting engine as a whole combines all of that resolved accounts with the transaction amount to generate an accounting journal. Once business event data is loaded into Fynapse, every journal that is produced is ultimately balanced by design, maintains complete traceability back to the originating purchase event, and records every configuration decision made along the way. So ultimately, that will give finance teams full confidence, full transparency, full auditability in the accounting output. Now, what we've seen is a complete journey of a single purchase transaction through the Fynapse Accounting Engine. We started at a business event. Here, the engine identified the relevant posting components. It resolved to the correct account lookups, evaluated the business dimension, and ultimately selected the appropriate general ledger accounts and produced a balanced journal. Because each step is independent, but also configuration driven, that same transaction can support multiple legal entities, multiple products, but also multiple accounting standards, such as IFRS and US GAAP, without duplicating the logic. In the next video, we'll take a closer look at accounting rules and see how these decisions are configured within Fynapse. Thank you.